instead of Sunday, it works better.
That would be something better.
And so to the extent possible, let's do that. I've already changed the dates and moved them, okay? So here's the way this works. I'm gonna turn this on. So here's the dates. Some of these, because, so in this case, the chapter 11 homework, so let's change it from the 6th to the 7th. But I've already changed the date and moved it, okay?
Is that for every week?
No, it doesn't work out that way. You know, the Tuesday, or the Monday, Wednesday classes, it just doesn't work that way. Because I thought of doing it when I made up the schedule originally. But, so anyway, but the 12th, we have a test on the 14th, so I can't do it. On the 13th, it's already on, for chapter 13, it's already on a Monday. Chapter 14 is already on a Monday.
Oh, okay, never mind.
And then the 15th, now our Monday's Veterans Day. So let's have it do Tuesday. Okay? Sound good? And then chapter 17 is already a Wednesday. And then chapter 16 has to stay where it's at because we have a test the following day. So
It's already changed in Moodle.
and it's already been changed in Moodle. So if you want to take it on a Sunday, no problem. If you want the extra day on these, you got it. And then you get a chance to learn faster. Yeah,
What was it, 11 on Mondays?
exactly. I just moved it, I just changed the dates. All right. Junior, I'm going to set this here for you. And by the way, let me get this. Yeah, I'll be with you just 1 second, Michael. I changed the due date on the homeworks that are marked. I couldn't do it on all because we have things like a test. And Michael, I haven't forgotten you. Let me put this down here and I'll be right with you. And Junior, would you like to put whatever you'd like me to call you on that? Okay. All right. So, now, Michael, thank you so much for waiting.
The one question I had, so all the tests, we're always going to be able to review the day before.
Yeah, because on the test, because we have a 2.5-hour class, we'll save the last hour or 50 minutes, depending which it is, for the test. The previous hour and a half will be for the study guide and the review. So the review will be right before the test. Okay, it used to be the class period before, but now it will be the day of the test. Okay, and just as before, there'll be a study guide for every test. The study guide is really, I'm going to turn on the lights here. The study guide is really more of a practice test than a real study guide. But we'll have a practice test. Yes?
Will we get the study guide, the class period before the test?
Yeah.
Okay.
Yeah, you'll get it well in
And they'll go
advance.
over it during the, right before the test. Okay.
And I just found, what I found is that the study guide is a good way to organize a review.
Yeah.
And that's just, it's always worked, but that's what I was working this time too. It's just a way to do a review.
Yeah, that's what I did last school.
Michael?
I don't think you realize, it's already in Google.
Well, study guide?
Well, the study
Yeah, study
guide.
guide's already in Google.
Mhm. Yeah.
Well, what's the probability that some of the questions on the test will be derived from the chapter quizzes?
Well, it's not impossible. Here's the deal. There's one test bank, right? Comes from the publisher. And some of them went to the test, some of them went to the study guide, and some went to the chapter quizzes. And every now and then, one question will show up in more than one place. It does happen. It's not very often. It does happen, but you know, it's an error. You know. But they all run for the same test bank.
Because the study guides from my previous class never really helped me get onto the test. It was kind of like a practice, but
Oh, okay.
I
Didn't
mean, it didn't really help.
Ah,
I thought it was
Because a lot of
really good.
A lot of people find it helpful, but, you know,
And who wrote your test? Or the test we'll have in this class? Who wrote
well,
it?
now, you guys went through rocks with me, right?
Huh?
I did.
Okay, you know, more.
But you're not gonna throw rocks at me.
calculators.
All right, okay, yeah. Maybe I should maintain anonymity. Let me put it this way. We work as a team, and so all three of us do the same test and we collaborate. And I wrote it. Yeah, they did, but we do collaborate, you know, and we do agree that, you know, change questions, so everybody has input, but now I'm the guy who wrote it.
Good job, sir.
Nice.
Yeah, all right, yeah, it's true. And then, yeah.
I'm looking at the schedule. For November, when we moved after Veterans Day, when we moved our homework to Tuesday,
Okay,
the day after, Wednesday, our chapter 17 homework is due.
Mhm.
Is that going to stay the same as chapter 17?
Um,
Say it right after.
it's just, the only reason I did it is, now, chapter 17 is an easy chapter.
Okay.
Basically, all it is, the bulk of it are the ratios, every hybrid chapter is a ratio. Well, all of those ratios show up in chapter 17.
Oh.
So a large part of chapter 17 is a review. And then what's new in chapter 17 is just, accounting can get really tough. It's just nothing will spring your brain.
Okay.
But it's easy stuff as far as accounting stuff goes, and then it's ratios. All right, you're welcome. And so, and then what I'll probably do, let me, you're done with that? Okay, all right, thank you. And then what I'll do with chapter 17 is when we get a little bit ahead of something, I'll just use that to go over chapter 17, because it's a piece of cake. You guys, so let's go ahead and do that. So, everybody's okay with all of that? Everybody signed the pictures, right? Anybody not sign it? All right, okay. Maybe on the break, would you like to come up and be sure to include your name? Oh, here you are, all right. Anybody else not sign it? Okay. All right. So, now, let's go ahead and get into chapter 11. So, what I'd like to do is review payroll. Let me do an exercise in payroll. And then, let me go ahead and finish the chapter. What time we have left, we'll come back and you guys do the practice in payroll. And let's just do it that way. We'll make sure we get everything covered. Okay? All right. So let me turn out the light so it's more readable. Let's start with the review, and then I'll do a practice. So here's the PowerPoint slides from the author. Okay. Payroll is what we're going over. So the employers incur expenses and liabilities from having employees. So here's what we have. What we have on this is gross pay is how much the employees make. Now and again, this is a review. So FIT, federal income tax, this is how much tax the employees are expected to pay on their earnings. And the employer keeps it and sends it to the federal government. State and local income taxes, if we worked in Oregon, there'd be a state tax withholding that would then be forwarded to the state of Oregon. Voluntary deductions like United Way, FICA tax, Medicare, FICA tax, Social Security, both of these are withheld from the employee's paycheck. Now later on we'll see that both of these are matched by the employer, but this is the employee part of it. Then you add all of those up, subtract from gross pay, you get net pay. Net pay is take home, that's what shows up in the law, okay? All right, so FICA taxes. So here is the Social Security part of it, and the book was written in 2010. So at that point in time, it was 6.2% of the first 106,800. So that means that as soon as you guys make 106,800, you quit paying this tax. Prior to that, you pay, okay? And 6.2% of 106,800 is 6,621.60. The FICA part of that is Medicare, and it's 1.45% with no cap, okay? And again, we mentioned that before, the employers act as an agent for the federal government. It's pay-as-you-go, and they take they take the taxes out prior to giving you your paycheck. And the same happens with the state, they act as an agent for the state. There's voluntary deductions at the employee's request, union dues, savings account, pension contributions, insurance premiums, charities. Okay. Here's what it looks like. Salaries expense is the total amount that's earned. Now, the first 5 of these are withholding. So here's the employees part of the FICA, Social Security, the employees part of FICA Medicare. Here's the federal income tax that the employee is expected to pay on their wages. Here's the employees part of the medical insurance premium. This is the union dues. Add all these up, subtract them from the gross, you get the net, and the net is called salaries payable, and that's take home. And notice all of these are payable because all of these are, they're collected by the employer, but they're forwarded to somebody. Okay? Now, the employer has additional taxes. The employer pays these payroll taxes. So the employer matches the FICA Social Security that the employee pays. The employer matches Medicare. And in addition to that, there's FUTA and SUTA. And FUTA and SUTA are the taxes that fund unemployment compensation. Okay? So FUTA is, federal unemployment tax is 0.8% of the gross with a cap of 7,000. So everybody pays it in January, then as soon as you're in 7,000, your employer stops paying this on you. Okay? The state unemployment is 5.4% of the first 7,000. And again, everybody pays it January 1st. As soon as you make 7,000, the employer quits paying it on you. And of course, FUTA, SUTA is part of FUTA. FUTA is really 6.2%. However, if the states elect, they can get the 5.4%, leaving the 0.8%. And when they get the 5.4%, they then administer the unemployment compensation. Does that sound good? Yeah, Gene? It is all right.
Are these slides on Moodle?
Uh-uh.
No.
All right. And then now these are the taxes that are paid by the employer. So here's the matching for the FICA Social Security, the matching for the Medicare. Here's the SUTA, here's the FUTA. Add all those up, they equal 277, and that's a debit to payroll tax expense. Addie?
So, which one do we not pay in Washington that we do in Oregon?
State income tax would be one.
The state income tax?
State income tax, they're different states, different,
Okay.
and we're, yeah, okay. All right. Okay, that will do that. Okay, all right, so let's do this. Why don't I do exercise 1116? And 1116 is found on page 465.
466.
I have 465, is it 466?
Yeah.
It is. All right. Okay, here's how it reads. The following monthly data are taken from the Unis company as of July 31st. The sales salaries are $120,000, office salaries $60,000. Here's the federal income tax withheld, state income tax withheld, Social Security taxes withheld, Medicare taxes withheld, medical insurance premium is $7,000, life insurance is $4,000, union dues deducted $1,000, salaries subject to the unemployment taxes are $50,000, the employee pays 40% of the medical and life insurance premiums. So they want you to prepare the journal entries for the accrued payroll, including employee deductions for July, paying the net payroll, the salaries payable for July, the accrued employer payroll taxes and other related employment expenses for July, assuming the FICA taxes are identical to those on the employees in the SUTA are 5.4% and 0.8%, and the cash payments of all the liabilities related to the July payroll. So what this says now is the wages that are subject to FUTA and SUTA is $50,000. Okay, so those are the wages that are subject to that tax. So all of those is under the $7,000 for the year. Okay? All right, so let's go ahead and go through this. So what it will work is on July 31st is the date of the, I'm going to put this up here. All right. There we go. That's all. what we'll have is what, July 31st? Okay, we'll have sales, salary, expense, now that's the gross. So the, but the XP for expense, so that's 120 is the gross for the sales. Office salaries expense will be the gross for the office salary. And that was 60. All right, now, the FICA Social Security tax payable is 11,160. Now, is that a given?
Yes.
All right, it is a given. But of course, what it is it'll be 6.2% times the gross up to the cap. So it's FICA dash Social Security tax, and it'll be a payable because the employer is keeping it out of the employee's wages, but it's a liability the employer has to send it to somebody. In this case, it was a given, it's 11,160, but he would have calculated it by 6.2% times the gross up to the cap. The FICA Medicare is 2,610, of course, it's 1.45% with no cap. The employee federal income tax payable, so it's the employee federal income tax, by the way, this was a payable, this is a payable, is 45,000. And so circular E is where you find the tables that tell you how much to do that, of course okay? Employee state income taxes payable, this is how much the employee will owe the state. And again, these are all payable, because you're going to send it to somebody, it comes to $10,000. Now, as far as the insurance premium goes, they tell you that it's a $7,000 premium. I'll just make my calculations up here. And the employee pays 40% of that. So the employee's part will be $2,800. Okay? So the employee medical insurance premium, so that's how much your employees pay. And I'm going to write INS for insurance and PAY for payable comes to $2,800. Employee life insurance payable and again, in this case, what it is they tell you that it's a $44,000 premium payment, and 40% of that is paid for by the employee. So that means that $1,600 is how much? So here's the total premium. $1,600 will be paid. Oh, I'm sorry. Here's the total premium. $1,600 is paid by the employee. Therefore, the difference is paid by the employer. This is the life insurance. This is the medical insurance. $7,000 is the total premium. 40% by the employee. 60% will be by the employer. Okay. All right. Employee union dues comes to, let's see, this is $1,600. Employee union dues. $1,000. This is $1,600. Now, if we add all of these up and subtract it from this $180,000, $105,830 is what's left. That's salary payable, and that's how much the employees will get in their paycheck. Now, what happens on this thing is this is how much you owe. So what happens is you pay it. And often what happens in this is the payroll checking account is often problematic. It's a whole bunch of checks, normally more than you'll write anyplace else. People alter them, and it's surprising how often people forget to cash them and just weird things. So a lot of times, what a lot of companies do is they have a specific account for the paychecks, and that just isolates the problems, okay? So when you pay it, again, it's the same day, it's July 31st, right? Now you're gonna pay it, and when you pay it, you debit salaries payable, which is right here, for the 105,830, and here's where we get that number. And of course, you credit cash for 105,830. And all that does is, that moves it from the regular checking account into the payroll checking account. Now, this is the employees, right? Okay, this is their gross pay, this is all the withholding, this is the net pay that shows up in their paycheck. Let's go on to the employer. So in addition to this expense, this $180,000, the employer also pays payroll tax expense. So again, this is on the 31st. It's a payroll tax expense. And it'll be a debit, but let's leave it blank for the minute. So what happens is the employer matches the employee's Social Security. So the employee's Social Security was $11,160. So the employers will be the same. So we have FICA, SCTY, tax payable, and the employer will pay $11,160. Okay? And notice the account name is the same. Both of these will go into the same account. Then when you pay it, it comes out of this account. So now, let's do the Medicare. So we have FICA, Medicare, tax payable, and that comes to $2,610. And again, it matches the employees. The state unemployment tax, now this is only by the employer. And of course, this is SUTA, right? Okay. Now, $50,000 worth of wages are subject to the tax. So let's just kind of figure out. So 50,000 are subject to the tax. This is the amount that's below 7,000 for all your, for any one person. We multiply that times 5.4%. So this is the wages that are subject to the tax. That means the amount of the SUTA tax will be $2,700. Okay. Then, as far as the federal unemployment tax payable, and this is FUTA. Now, this will be $50,000 times 0.008, or 0.008. And don't forget, 0.8% is 0.008 as a decimal, right? So that turns out to be $400. Okay. Now, I'm just going to move this up here since we no longer have to make that comparison. Now, the employee medical insurance payable. And again, it's the same account as this one, right? It's the same account, but now it's the employer's part of it. So basically, what it boils down to is $7,000 is the amount of the premium, 60% is by the employer, so that means that it's $4,200.
So the employer's portion of the insurance falls under the payroll tax expense?
Yeah, and the name for this thing, yeah, and often you say payroll and benefits tax, payroll taxes and benefits.
Oh, okay.
By the way, that's a good point, because you're right. It should have a different name. Because normally the word benefits will show up in their addition to what they have.
Okay.
And this is the account they gave me. Yeah, Mariah?
Where did you get that 60 and the 40%? Is that?
It's a given.
set?
That has to be a given, and it'll show up some,
Yeah,
let's see.
it's printed 40, it's the last sentence of the first paragraph. Employee pays 40% of medical and life
Yeah,
insurance premium.
I was looking for a number.
Oh, me
They were
too.
spelled out in the words. Yeah, because what I meant to say, it's gotta be a given, right? I don't see a 40%, but if they spell it out in words. Why?
Thank you.
And then they made the word benefit out of this account, which is normally what you see, okay? Let's put, okay. But again, whatever's in the chart of accounts, that's what you gotta use, all right? Now, we're up here to employee life insurance payable. And again, it's the same account title, so it'll go into the same account. Together, they will equal the total. In this case, it's 4,000 is the premium, and the employer pays 60%. So that means the employer sends 2,400. So you add the employer to the employee, and it will equal 4,000. Okay. In this case, it comes out to 2,400. Okay, so you add all of these up, it equals 23,470. So the total expense to the employer will be 100, so the total expense will be 120. Okay, plus 60, plus 23,470. So the total expense will be what? It'll be, this would be.
233,470.
203,470, okay. And that's the total expense. So that's the salaries plus the additional payroll tax expense and benefits. Okay, that's the total cost of the employer. Now, the next step then says they pay all these payables. Okay, does that sound good? So when they do that, what it will do is this 11,160 was posted to the FICA Social Security. This 11,160 was posted to the FICA, with the FICA Social Security. Add those together, and they equal 22,320. So FICA is debited for the 22,320. Everybody sees where I get the 22,320? Okay. Then you add the two FICA Medicares together, and that's sent. So that's FICA, Medicare, tax payable. Add the two together, and they equal 5,220. Okay. You send in this 4,500 in income tax, so that's employee federal income taxes payable. How's that? Employee federal income tax payable, and that's 45,000. And again, here's where I'm getting that 45,000. Okay. Then you have employee state income taxes payable, that'll be this 10,000. Now, by the way, because these, okay, employee, okay, state income tax payable, that would be 10,000. Then you have the insurance medical premium. And that'll be the full 7,000, 60% paid by the employer, 40% by the employee. Employee life insurance payable. $4,000, again, 60 and 40. Employee union dues, send this to the union. 1,000, and here's where that number's coming from, okay? State unemployment, that'll be 2,700, here's where it's coming from. SUDA, I'm just gonna put SUDA, and that comes out to 2,700. FUDA, and here's where that number's gonna come from, 400. All right, and federal and FUDA is 400. You add all of these up, and it equals 97,640, and that's a credit to cash. Now, let me put up the printed copy in case there's any questions, give you a minute to look at it. See if I can get it on one screen. Make it a bit bigger. See what questions there are. Any questions of any kind?
Where did the 22,320 come from? The FICA Social Security tax payable on July 31st?
Well, what it is you add the employees part to the employers part. Together, this is what's sent to Social Security. The employer pays half, the employee pays. The employer matches the employees. So it's the two of them added together. And the same is true of the Medicare. And of course, another way of saying the same, notice that FICA Social Security taxes payable, same account, FICA Social Security tax payable, same account, FICA Social Security tax payable. So when these are posted from the journal, this ledger account, they both go into the same ledger account. It's another way of saying the same thing. All right. How's everybody doing? Yeah.
For the third one, for the payroll taxes expense, how did you get 23? So 470.
Okay, 23,470. Okay, right, let me see.
Number 3.
Oh, he added all of these up.
Okay,
Mm-hmm.
thank you.
Yep. Any others?
Just a simple one. It doesn't matter whether you put FUDA or SUDA first, do you?
Uh-uh, it makes no difference.
Okay, I just stick with federal, state, federal, state.
Mhm. That way you don't, and by the way, you know, when you do it that way, you don't miss things. Because another thing, in the old days, if you do try to keep everything in the same order as the chart of accounts, you're less likely to make an error. It's kind of another way of saying the same thing. All right, you guys doing good? Okay, so anyone working with this? All right. You know, it's so much easier to work with at your desk, and there's 4 of you. Listen, and it's easier to pass from the front to the back. So Junior, when you're done, can you hand it back here? Want to raise your hand?
Sure.
Okay, when you're done, it goes to Antonio, Antonio goes to Michael. And it's just easier to go from front to back, okay? So here, and it's easier to work with the jazz, you know, it'll go twice as fast. Yeah. Oh, thank you. Who needs to sign the roll? All right, good. Let me do this while I'm in business. And then, by the way, did you get the notification about changing the homework days to Monday? No, here we go. Let me do 3 things at once. No kidding. If we make the homework due in the investigation transaction net, so to the extent possible, I will change this already. Like, change this to Monday, change this one is Monday, this one is Monday. And I'll leave that with you. Here's the roll, and whatever you know, there's the kind of the pictures. All right. Everybody else got the roll, right? Everybody else got the pictures? Okay. So let's go ahead and let me do one more, and then we'll come back to this for practice depending on time. Okay? Now that's coming around. So let me do exercise 1116. Oh, we just did that one. No, we did 1113, right?
No, the first part was the.
Okay, in this case, let me do 1113. Okay, and that's gonna be,
Kind of, yeah.
yes. That was page 465. Right, that would be page 469.
Oh, wait.
It'd be the same thing.
So 1116.
The first month would probably be.
So this here, all right.
Where I took it, I
We just. Your basic bookkeeping,
All right, so here's 1113, and it's on page 465. So this is the, let me get this straight. There's exercise 1113, which is right here, and that's page 465. Okay, make it big, and watch it right here. Make it as large as possible. And you know that, is that, Junior, I'm gonna need that back if I gave that to you, because I need this, oh, here's this one. No, here you go. I thought it was on the back of that, so let me just take a look here. And it just works better if I write it. Oh, this is pretty steady, here we go. All right, so here's how it reads.
Which column?
Right here, exercise 1113. Okay, so the Tony Lieberman, an unmarried employee, works 48 hours in the weekend of January 12th. His pay rate is $12 per hour. His wages are subject to no deductions other than FICA, Social Security, FICA, Medicare, and federal income tax. He claims 2 withholding allowances. Compute his regular pay. Overtime for the company is 150% of regular pay in excess of 40 hours per week, gross pay. Then compute his FICA tax deduction, 6.2%, Medicare, 1.45%, income tax deduction, use the brackets from 11-6A6. The total reductions in net pay, round the amounts to the nearest cent. All right, so let's go ahead and do that. So this is 11-13, regular pay. The regular pay will be 40 hours times $12. That ends up to be $480. Okay, so it's the regular pay times anything under 40. Overtime. He worked 48 hours, so that's 8 overtime at 12 times 150%. Because he has 12 hours, so he gets 18 hours, $18 an hour. So 8 times 18 is 144. Now, is everybody okay with that?
Good question.
Yeah.
It says this company's policy is 5%. Isn't that standard for law?
There is labor law and there's also labor contract. And often Sundays, weekend. I think it is the law. But again, laws change by state, et cetera, so, no.
So the company can actually, and overtime it's
A lot of times it's determined by the state, they can also be determined by the union. Of course, that is greater than what the state minimum.
Yeah, sometimes they can do like 200% or 250%.
But
Sure, it's 70 talking about that. What's that?
150% is the standard minimum, it's not less than that.
Yeah, but labor law is so complicated that you gotta do whatever your state says, because it gets very complicated. There are people that it
Because
doesn't
it almost
apply to.
sounded like this.
But labor law is so complicated that there's contract employees and Walmart, of course, puts their own shenanigans. Is there a hand or something? Okay, all right, yeah.
What was that equation? I can't really read it.
Well, what it is he worked 48 hours.
Yes,
So there's 8 hours of overtime,
yes.
which is $12 per hour times 150%.
150.
So this is really, so it's 8 hours at $18 per hour. and that comes out to $144. So the gross pay, all right, the gross pay, add those together, comes to $624. Okay? Now FICA, and if you guys got a question, could you be sure and bring it up to the class or whatever? Okay? So the FICA is 6.2%, so we get so we have 624, that's the gross, I'll just put it here, 624 times 6.2%, that turns out to be 3869. And this is Social Security. The FICA Medicare is 1.45% times the 624. That turns out to be 905. Now, FIT, F-I-T, federal income tax. Okay? So in this case, what they do is they refer you to, let me put this here, they refer you to appendix, or they refer you to this page,
458.
gotcha, 458, which is right here. So it's page 458, it's exhibit 11-A6. So this came out of Circular E. So what it is you're divided either single or married. This is the single section. Then they have daily, then they have annual, semi-annual, monthly, weekly, daily, etc. In this case, it's a single person and a weekly payroll. Now in this case, let's take a look here. All right, net pay. So unmarried, 48 hours a week, 12 hours, okay. Unmarried, all right, 48 hours a week. So, in this case, the way you do this is 640. So in this case,
$624.
Okay, you're right there, won't it? Okay. So in this case, and there's, it must have, okay, it must have 2 deductions in
Yeah.
there.
So
Okay.
he claims 2 withholding allowances.
2 withholding allowances, okay. So again, over here it's at least 620, but less than 630. So 624 falls in this bracket. 2 withholding allowances, so this is the amount of federal income tax withholding. Sound good? Okay. And there's the 2 withholding allowances. Okay? And now, by the way, what if this person made $630? Well, what it is, it would fall in the next bracket because it has to be at least 630, but less than 640. So the 630 is here and 630 is there, but exactly 630 falls in the next bracket. You guys okay with that?
So that's
All right. And you put this thing back here. And you put this thing back here. So the FIT, federal income tax, is $61. You add all those up, it comes to $108.74. So here's the gross pay, here's the total deductions. That makes $515.26 the net pay. So let me put this up here, in case you want to see the printed copy and how they did all of this. Oh.
I was wondering the same thing.
Does it matter what format we put it in?
Not on this. This is just kind of like a worksheet.
Okay.
And all they're doing here is they're just showing you how this works. And again, the reason there was a page mix-up is because this is the one I wanted to do first and do the other one second. Is the reason it kind of comes across, and this is just kind of, this is working into it. Okay. All right. Now, let's go ahead and make sure we cover the whole chapter. And if we have more time, we'll come back and practice this. See how the time works out. Sound like a plan? Are you guys doing good? Should we go ahead? All right. Now, what we've done is we've been talking in terms of payroll, definitely determinable. Let's get into a different category of liabilities. Let's get into estimated liabilities. So let's get into estimated liabilities. How's it, Anna, how you doing?
Good.
You're doing good? Okay. All right, I'm going to put this here. All right. Now let's get into this. Oh, good deal. All right, thank you. Everybody got all the good copies they need? All right, you guys, let's go ahead and get started here. So let's get into some estimated liabilities. So up till now, they've been definitely determined. So these are estimated. Okay. So sometimes what you have is you have a known obligation, right? You know that you owe the money, but sometimes you're uncertain as to the amount. And I'll give you examples of these in a minute. Sometimes, okay, but it can be reasonably estimated. Okay, so one is like the health and pension benefits as an example of this. Okay, so in this case, what they do is, okay, in this case, what they have is the medical, for example, in this thing, the insurance, the medical insurance premium is $8,000. Okay? Now, I'm sorry, it's $8,000, they agree to pay $8,000 and 10% of the employee's gross. Okay? So it's $8,000 plus 10% of gross.
Is this like the journal entry?
Well, I'm just giving you the problem.
Oh, so this is just the.
Just the problem. And 10% of gross, and the gross equals $120,000. So in this case, what it is that 10% of this is $12,000. So what you got here is you have the employee benefits expense, it equals, I'll leave that blank for a minute, and it's December 31st. It equals the